I'd like to welcome y'all back to the greatest show on earth. Some more news you guys could use. And today we got a great topic asked from one of our guys in the member center. We have been tracking the GDP growth of the different economies. And he was wondering, how do we actually trade this data? Great question. We do see here. So we're going to start with Australia. We do see that they have a negative input for GDP rates. Let's go ahead and dive into this. And first, we're going to take a look at what is GDP, and then we can actually work our way into how we can make educated trade decisions, whether it be in the stock market or the foreign exchange market based off this data. So GDP is going to be our gross domestic product, or GDP. It's a measure used to evaluate the health of a country's economy. It's going to be the total value of goods and services, what people produce, the services that people are providing in a country during a specific period of time. It's usually a year. So you may be asking, what does this mean to me? You know, we see all this verbiage, GDP this, PMI that. Well, actually going to give us a great leading indication to where we want to position ourselves and what we can do in trade. Now we see that Australia's GDP is actually coming down. If you guys are in the know, we do know that the central banks are in a what we call a hiking cycle. Everybody's raising rates, actually giving a little strength to their different economies and affecting their GDP. So when we take a look at how does a decrease in the GDP affect actual interest rates, one main thing we're trying to look for and understand is the cycle that the central banks will be on. Will they continue to hike rates? Will they actually be less hawkish and become more dovish, which is give us a sign of whether, either buy the AUD or sell the AUD. There's also some things in the background, like their relationship with China. The slowing in China is giving us the vibes of a global recession. So we're definitely going to keep our eye on GDP so we can know which way we want to align ourselves, whether it's going to be in the Australian stock market or in their currency. Now, an increase in GDP will cause an increase in average interest rates, which allows investors, or generally makes investors flood to the stock market as they look and hunt for a yield. But in contrast, a decrease in real GDP, aka a recession, will call a decrease in the average interest rates, which that's going to be the vital part. If interest rates start decreasing, or they're not going to be hiking, we know as most investors may be actually aligned looking for an increase to buy the AUD, an increase in the interest rate. We'll be a little bit more informed to know we may not want to be so bullish in that moment due to the potential that the GDP is decreasing, or there's potential of a recession, and the central banks may have to pause or press the brake down on their hiking cycle. So another thing that we do like to understand is the relationship between inflation and GDP. We'll go ahead and save this for another video. I want to make this short and sweet and let you guys know that there are things that we like to use, or this bank data that gives us an edge to the everyday trader. And we understand that going forward, that the moves up in, let's say, the AUD currency are generally going to be selling opportunities. We also did get some data that we've been watching for commodities to start to weaken or come off. And we're starting to notice those signs, as one of our members posted today. Actually posted today for us. So that's another good indication that as AUD being a commodity currency, we may not want to allocate so much capital to being bullish in this market. So hope you guys caught some value from this. Looking forward to, throw some more videos. If you guys like and share for us, if you do like this video, found any value, helps us a ton, allows us to keep, dropping this content, bringing this news you guys could use. And if you got any questions, interested in our member center, feel free to drop a comment. We'll give you some more information and see if we can help you guys actually survive, or help you guys make it through this bear market. So once again, Nick representing KVFX, we're out. As always, trade light, trade right. Peace.